Do you know how many people are walking towards financial ruin without even knowing it? 93 out of 100. Warren Buffett has just dropped the biggest bomb of his career. If you continue to follow traditional financial advice, you're heading straight for failure. This isn't just an opinion, it's what the numbers say. In the next few minutes, you'll discover exactly what to do to avoid becoming another statistic. You'll learn why the classic retirement model is obsolete, what the biggest financial risk is today, and the precise strategy Buffett recommends for those who don't want to lose any more time. If this helps you, please like the video so more people can see it, because this information can change lives. And let me know in the comments if you've ever thought that buying a house was the best investment of your life. For decades, we believed in a simple formula: work hard, save, buy real estate, invest conservatively, and wait for retirement. It was the American dream, the plan our parents followed. But Warren Buffett, the man who built a fortune of over $100 billion, just said something that's shaking Wall Street: that model is dead. The end of the classic retirement. Until recently, the plan was simple and seemed to work for almost everyone. You'd get a stable job, save money month by month, buy your first house, maybe a second property later, invest in conservative funds, government bonds, or savings accounts, and just wait for time to do its job. You'd eventually retire with a decent pension and your house paid off, living peacefully for the rest of your life. But Buffett has officially declared that model is dead. And it didn't die yesterday, it died years ago, but no one realized it until now. The reason? The world has changed radically. Inflation is no longer the predictable 2% we read about in economics books. Interest rates go up and down like a roller coaster. Financial crises that used to occur every 20 or 30 years now hit every 5 to 7 years and are increasingly devastating. Continuing to believe in that old formula isn't just naive, it could literally cost you your future financial freedom. Why? Unlike someone with plenty of time to recover from a mistake, you no longer have that luxury. Every wrong financial decision is exponentially magnified. In his last letter to shareholders, Buffett was brutal: those who don't adapt now run the risk of retiring tied to debts and illiquid assets. Do you realize what this means? It means you can have a $500,000 house, a plot of land, and some fund investments, and still be financially trapped. Having possessions isn't the same as having financial freedom. The difference between real wealth and paper wealth is something very few people understand. You can be a millionaire on paper, but if you can't convert that wealth into cash when you need it, you're actually poorer than someone with a smaller net worth but more liquidity. This is especially critical because major expenses begin to hit at different life stages: healthcare, children's education, care for elderly parents, and a series of emergencies that require immediate cash. This is the part that will change your perspective forever. It's something Warren Buffett discovered by analyzing thousands of families who lost everything in recent crises. The problem isn't just having few liquid assets, it's much deeper and more dangerous. Do you want to know the biggest risk people face today? I'll reveal it in a moment. Believe me, even those who consider themselves good money managers are falling into this trap without realizing it. The biggest risk today. The greatest enemy of a secure financial future isn't a lack of money, it's having the wrong money in the wrong place. Warren Buffett calls it mismanaged heritage, equal to invisible liability. It's the most dangerous trap that millions of people fall into. Let me explain exactly what this means. Imagine a typical person with a solid financial record. They've worked for 20 years. They have a house worth $300,000, a plot of land they bought as an investment 10 years ago, some conservative bank applications, and maybe a retirement fund. On paper, they have a $500,000 net worth. They feel secure, right? Here's the problem Buffett identifies: if those assets don't generate monthly cash flow and you can't quickly convert them into money when an opportunity or emergency arises, they aren't assets, they're financial traps. It's like having $1 million in diamonds buried in your backyard. Technically, you're a millionaire, but practically, you're broke. This becomes even more critical because the time you have to recover from mistakes is not limitless. Every year that passes without generating real returns is a year lost forever. Buffett analyzes the typical middle-class family, a $400,000 house with a $200,000 mortgage, a $150,000 piece of land that generates no income, a $50,000 car, and some conservative investment funds. Total net worth? $600,000. Sounds impressive, right? But when a crisis hits, when you lose your job, when a medical emergency arises, or when a unique investment opportunity appears, what happens? You can't sell the house quickly without losing money. The land doesn't sell. Investment funds have early withdrawal penalties. The car loses value every day. The result? You have a $600,000 net worth but only $5,000 available to act. It's like being thirsty in the middle of the ocean, water everywhere, but nothing you can drink. The problem isn't just a poorly distributed net worth, it's the lack of flexibility. Buffett is clear, time and liquidity are worth more than having assets on paper. This equation becomes critical because you can no longer afford to wait decades for an investment to recover. But wait, because what you're about to discover will completely change the way you see money. Warren Buffett has just revealed the new golden rule and why what was once considered dead money has now become the best strategy for financial survival. Are you ready for this shift in mentality? The new golden rule, liquidity. For decades, Warren Buffett preached the same thing as all financial gurus: invest for the long term, hold your positions, and time is your best ally. But something has radically changed in his thinking, and what he just revealed is revolutionizing personal finance. Buffett's new golden rule is simple but brutal: liquidity is not a waste, it is freedom of action. To understand why this is so important, you need to grasp that the financial world has changed forever. Opportunities and crises no longer follow the patterns of 20 years ago. Before, a financial crisis came every 20 or 30 years, lasted a few years, and was followed by decades of predictable growth. You could buy a house, keep your investments, and just wait. Time did the heavy lifting. Now, crises come every 5 to 7 years, they're more intense, and recoveries are more volatile. In this new world, having cash available immediately isn't paranoia, it's strategy. Buffett has completely changed his tune. Now he says, selling everything doesn't mean despair, it means preparation. Do you realize how radical this is? The same man who built his fortune by preaching patience and the long term is now saying that being liquid is being protected. Sometimes you just get tired of trying, of watching video after video without knowing where to start. I've been there too, until I found a clear path. If you truly want to achieve financial freedom, even as a beginner, and learn to dominate the stock market to build wealth from scratch, now is the time to take the first real step. Learn to invest in giant stocks like Apple, Nvidia, and Tesla with the best practical course, with live daily analysis and a private community to support you. Start right now. The link is in the comments or in the video description. Don't miss this opportunity. Start winning in this market and secure your financial freedom. But let's get back to Buffett's strategy. Why has liquidity become so important? Because the best investment opportunities appear precisely during crises, when everyone is desperate to sell. If you have cash available when the market collapses, you can buy shares of incredible companies at ridiculously cheap prices. However, if your money is trapped in properties, funds with penalties, or illiquid investments, you can only watch as others profit. Buffett tells the story of 2008, while families were selling their homes at a loss to pay off debts, he was buying shares of Bank of America, Goldman Sachs, and Coca-Cola at prices he would never see again. The difference wasn't that he had more money, but that he had the right money, cash available immediately. This is even more critical for the average person today. You need to be able to move fast when opportunities arise. You need to be able to cover emergencies without going into debt. You need total flexibility. Let me ask you a question that could change your perspective. How much of your current assets can you convert to cash in less than 7 days without losing money? If the answer is less than 30%, Buffett would say you're in an extreme risk situation. But here's something that will surprise you even more. Warren Buffett has identified exactly which assets most people consider safe but are actually the most dangerous traps. Do you want to know what they are? I'm warning you, that house you bought thinking it was your best investment could be the exact opposite. This is going to clash with everything you've been taught. The trap of physical assets. Warren Buffett has just revealed something that will shock millions of people. The investments you were taught were safe and solid are actually patrimonial prisons disguised as wealth. Every day you hold on to these assets is a day closer to financial disaster. Let's be clear about what it really means to own big houses, land, small businesses, collections, or any asset you can't quickly convert into cash. They look like solid wealth and are impressive on your financial statement, but they are invisible chains that tie you to a future without options. First, there's the problem of time. When you need to sell a property, how long does it really take? In the best case, 60 to 90 days. In an economic crisis, it can take 6 months, a year, or it might not sell at all. Meanwhile, you're still paying for maintenance, taxes, and insurance. It's like having an employee who costs you money every month but never produces anything. Second, the problem of real value. Your $400,000 house from 5 years ago, with current inflation, needs to be worth $480,000 just to maintain its purchasing power. But sales costs, commissions, and taxes can easily take $50,000. Suddenly, your profit of $80,000 becomes a real loss of purchasing power. Third, and this is the most dangerous, the problem of lost opportunity. While your money is trapped in an illiquid property that doesn't generate cash flow, you're losing out on hundreds of investment opportunities that could multiply your money. Buffett explains it like this: each dollar trapped in an illiquid asset is $10 you don't earn in real opportunities. Here's the part Buffett considers most dangerous: these assets not only don't generate money, but they constantly drain it. A big house requires maintenance, insurance, and taxes. Land may require care, surveillance, and more taxes. A small business consumes time and energy that you may not have in abundance. Buffett was absolutely brutal in his assessment: if it takes you more than 60 days to turn an asset into money, that asset is a threat to your financial freedom. Do you realize how revolutionary this is? The richest man in the world is telling you that the traditional strategy of accumulating properties is a trap. If you make a mistake, you may not have decades to recover. You only have a limited time before you need that money to live. Let me give you a real example Buffett uses to explain this. A couple had a $600,000 house, completely paid off. They felt rich, safe, and successful. But when the husband lost his job during the pandemic, they couldn't pay their basic expenses. They had $600,000 in assets but only $3,000 in the bank. As a result, they had to sell the house at a loss, move to something smaller, and lost years of work and savings. Do you know what would have happened if, instead of having that $600,000 in a house, they had $400,000 in liquid investments? They would have survived the crisis perfectly. They might even have been able to take advantage of the opportunities that arose during the pandemic. Buffett sums up the lesson with a question that should make you think deeply: are you accumulating freedom or dead weight? To answer this honestly, you need to understand something that will soon open your eyes to the financial future that awaits you, especially if you continue to follow traditional investment strategies. And I'm warning you, the numbers are absolutely terrifying. The shock of predictable scarcity. Warren Buffett has just made a prediction that's sending shockwaves across Wall Street. He identifies something he calls predictable scarcity in 3 fundamental pillars of the economy: water, energy, and food. The numbers are absolutely devastating. Look at the data Buffett presented. Over the next 15 years, the cost of drinking water will increase by 300% on a global average. Electricity, with new environmental regulations and resource depletion, will skyrocket by 250%. Food, due to climate change and scarcity of arable land, will see prices increase by 400%. Do you know what this means for someone planning for retirement? It means the basic cost of living will multiply by 3 or 4 times. So, if today you spend $3,000 a month to live comfortably, you will need between $9,000 and $12,000 a month just to maintain the same standard of living. Here's the devastating problem Buffett identifies: most people have their savings and investments in vehicles that will not grow at the same rate as these costs. Traditional retirement funds, savings accounts, and government bonds historically yield returns of 4% to 7% per year. But if the cost of living increases by 15% or 20% per year due to the scarcity of basic resources, your savings lose purchasing power every single year. It's like being on an escalator that's going down while you're trying to walk up. Even though you're moving, you're getting lower and lower. This is especially brutal for families with children because expenses are multiplied. Education, health, and quality food will all cost exponentially more. Do you realize why Buffett completely changed his investment strategy? It's not pessimism, it's mathematical realism. The numbers don't lie. And whoever doesn't prepare for this new economic reality will be another victim of predictable scarcity. But this is where the story takes a hopeful turn. Warren Buffett didn't just identify the problem, he designed the exact solution. Do you want to know the 3-pillar plan he specifically recommends? A plan that not only protects you from the coming crises but also positions you to prosper while others suffer. This will change your financial perspective forever. Buffett's plan for everyone. Warren Buffett has just revealed the most revolutionary plan of his career, specifically designed for those who don't have time for financial experiments. It's a strategic realignment based on 3 pillars that can be the difference between prosperity and financial survival in the coming years. The first pillar is immediate liquidity. Buffett recommends that at least 40% of your total assets be in cash or investments you can convert to money in less than 72 hours. I know it sounds conservative, even boring, but listen to me carefully. This cash isn't dead money, it's your secret weapon for the opportunities that are coming. When there's a financial crisis, when markets collapse, when companies are worth a fraction of their real value, who gets richer? Those who have cash available to buy. Buffett bought some of his best investments during the 2008 to 2020 crisis, acquiring shares of incredible companies at ridiculously cheap prices. But he could only do it because he had immediate liquidity. The second pillar is income predictability. This means investments that generate constant monthly cash flow, no matter what happens in the world. This includes stocks that pay consistent dividends, real estate assets, or businesses that produce monthly income. The key is that you don't have to depend on selling assets to have money, your assets pay you while you hold them. Buffett is clear about this: you can no longer afford to bet on long-term capital gains. You need your money to work for you and pay you every month. It's the difference between having an investment you hope will be worth more in 10 years versus an investment that gives you cash every month during those 10 years. The third pillar is antifragile assets. These are assets that not only resist crises but are strengthened by them. Buffett identifies 3 key sectors: renewable energy, food infrastructure, and water technology. Why these sectors? Because no matter what crisis comes, people will always need energy, food, and water. As these resources become more scarce, their value automatically increases. Look, I know what it's like to want to get ahead, to want to have control of your money, but to feel like something is always missing, that it's never enough. That's why I'm telling you this from the heart: if you really want to change your financial future, even if you don't know anything yet, you can. There's a course that teaches you step by step how to invest in stocks like Apple and Tesla, with live analysis, daily support, and a community that guides you. I wouldn't be recommending this if I didn't know it really works. Click the link in the comments or description and start right now. Don't overthink it. This opportunity could be the one that changes everything. Now, let me explain how to implement this plan practically. If you have, for example, $200,000 in total assets, Buffett recommends $80,000 in cash or liquid equivalents, $80,000 in monthly income-generating assets, and $40,000 in anti-fragile sectors. Does it sound conservative? Maybe. But Buffett demonstrates with numbers that this distribution not only preserves your assets but makes them grow constantly and predictably. While others lose money in crises, you have cash to take advantage of opportunities. While others worry about their monthly expenses, your investments are paying you. While others see inflation destroy their purchasing power, your antifragile assets are automatically revalued. The key to this plan isn't to maximize profits but to maximize freedom and peace of mind. Financial freedom is worth more than any speculative gain. The peace of mind that comes from knowing you have a safe income and money available is priceless. But there's something deeper in Buffett's strategy, a complete philosophical transformation about what it truly means to be rich. Are you ready to discover why this new mentality can change not only your financial situation but your entire relationship with money? The mindset transformation. Warren Buffett has just shared the most profound lesson from his more than 70 years of investment experience, and it goes far beyond numbers, strategies, or financial techniques. It's a complete transformation of mindset that can change not only your financial future but your entire relationship with money. Buffett's great revelation is that the goal should never be to accumulate possessions but to conquer financial freedom and dignity. What's the difference? It's simple. You can have $1 million in properties and be financially trapped, or you can have $300,000 well distributed and be completely free. Real financial freedom isn't measured by how much you have but by how much control you have over your time and your decisions. If you have to work to pay for your basic expenses, you're not free, even if you have a millionaire net worth. If you can't make an important decision because you lack liquidity, you're not free, even if your net worth looks impressive on paper. Buffett sums up his new philosophy with a phrase that should be etched in the mind of every person: liquidity is not about profitability, it's about sovereignty. Sovereignty means that you decide what to do with your time, where to live, and how to live, without anyone or anything forcing you to make decisions out of financial desperation. To achieve this sovereignty, sometimes you have to do things that go against traditional logic. Sometimes you have to sell that big house that's a good investment to have more freedom of movement. Sometimes you have to change those long-term investments for assets that generate immediate cash flow. Sometimes you have to prioritize agility over accumulation. What weighs you down needs to be sold. What grants you agility must be prioritized. This isn't a philosophy of scarcity, it's a philosophy of strategic intelligence. Buffett learned that in today's world, those who can move fast have an advantage over those who have many assets but little flexibility. Comment below if you've ever felt like you had money but didn't have freedom. Because that is exactly the problem Buffett identified in millions of seemingly successful people: they have assets, but they don't have freedom.